What's going on, guys? Marc Guberti here. In this video, we're going to talk about finding growth stocks. The reason people are attracted to growth stocks is because they are the ones that give you the best shot at beating the market. And we're not talking about penny stocks that can 10x or 20x in value, but just as easily lose 80%. We're talking about stocks of companies that are growing and have that strong future potential. One of the most important things about any growth stock is that the growth story remains intact. Revenue is the big indicator a lot of people look at. You look at earnings too, as long as there aren't massive losses, because a lot of these companies aren't making a profit. As long as there aren't massive losses, but the revenue's growing, that's fine. But as the revenue decelerates, if that ever happens, if less people embrace a platform, if we're talking about something like Pinterest, which a big metric there is monthly active users, if there's any type of deceleration, any cracks to the growth story, that's going to rapidly hurt a growth stock's value. So the growth story is really important for any of these stocks. Now, another thing to look at with growth stocks is the market cap, because the market cap really affects the likelihood of a stock doubling, tripling, quadrupling, etc. in value. So if you look at a company like Amazon, it's over $1 trillion in terms of market cap. For it to double in value, it would have to get to over $2 trillion, which is a very hard feat to accomplish. No company yet has hit that 2 trillion threshold as of this video. But if you look at a company with 5 or 10 billion in market cap, it's easier to have that company double. That's like a $5 billion company just has to increase its market cap by 5 billion, as opposed to something like an Amazon having to increase its market cap by over 1 trillion just to double. So the sweet spot is anything under 25 billion. There are some growth stocks that they do have $100 billion market caps and they could still grow nicely, but to double, you have to double the whole market cap. And when that number is smaller, it is easier for a stock to double. With many growth stocks, you can expect a lot of volatility. While your typical stock in the SP 500, maybe it goes up 1% one day, down 1% the other day, and something in between those numbers, unless there's bigger news, the typical growth stock, you can see it have a 4% up day, 10% down day, another 15% up day. So these are very volatile stocks that are going to have huge swings in either direction on news, because that growth story is very important. If the growth story strengthens, that stock is going to rapidly strengthen. If the growth story decelerates, that stock is going to fall apart, because a lot of these companies, again, they are not profitable. And the long-term play is that they grow enough with the revenue and they figure out their bottom line to the point where they do make a profit. And then at that point, they're this ridiculously big juggernaut of a company. So that's one thing to know. If you're a growth investor, you could definitely expect a lot of volatility along the journey. So while revenue is definitely the main focus, earnings are also important. If you have a company that expands its revenue but has massive losses that expand as well, that could be a sustainability issue. Because if a company has to spend $2 to make every dollar, and that thing just keeps compounding and growing with a market cap millions and billions, and they don't think to address this issue of spending $2 to make a dollar, it's only going to be a matter of time before people notice that and they just start selling out of the company. Again, this is part of the growth stage. You usually see a lot of companies that are net losses, that have accelerating revenue, and they need the investments in order to keep on growing with that promise of profitability later down the road. So a good metric to look at for growth stocks is EPS. EPS stands for earnings per share. You want that to go up as often as possible. So maybe it's at negative 20 EPS right now for a company. If you see the revenue go up by 50% and then you see EPS is like negative 50 cents, that's a problem. If you see it go from negative 20 EPS to something like negative 10 EPS, it shows that the revenue is growing and the company is on that path to profitability. They're cutting down on their losses. You could look at this type of stuff through Yahoo Finance. They provide EPS breakdowns. They provide revenue and earnings breakdowns, so you can see the type of growth on both of those metrics. Revenue is going to be the big one for growth stocks, but you want to just make sure that the EPS is moving closer towards profitability or scaling up if the company is already profitable. Now, a big thing with growth stocks is you'll hear that a lot of them are overvalued. And the definition of overvalued, it depends on what you measure it against. So if you measure any growth stock against something like the SP 500, any type of index, then it's definitely going to be overvalued, because some of those companies in the SP 500, they're banks, they're energy companies, and that's going to really lower things like the PE ratio, the price to sales ratio, which is more important for growth companies, because a lot of the growth companies, since they're not profitable, they don't have a PE ratio, but all companies do have a price to sales ratio. So the SP 500 has a bunch of these companies that they have relatively low PEs, relatively low price to sales, just based on what industry some of these companies are in. So when you are comparing to see, is a growth stock overvalued? Is it trading at a bargain? Compare the price to sales ratio between that growth stock and that growth stock's industry. So if you look at a tech growth stock, compare it to other tech stocks and compare it also to other growth stocks in the tech industry. So it's getting more specific about what you're comparing to really determine if something is overvalued or not. And even if you come to the conclusion that something is overvalued, that doesn't mean that the stock price will go down. Some companies, they are overvalued and then they go down. Other companies are overvalued, but they will still double in price, because overvalued, that entire term, it's all relative. Some people may see something as overvalued and other people may see it as a bargain. The same exact stock, it's about looking at the numbers, price to sales, but then you can look at growth opportunities and say these growth opportunities, again, that growth narrative indicates this stock can go a lot higher, indicates there's a lot of opportunities for it to accelerate. And one of the best ways to get into growth stocks is through the DCA approach, dollar cost averaging. So pretty much, since stocks are so volatile, if they're growth, you want to get in now. Like when you have it in your portfolio, it creates a very different attachment to the stock versus if you're just looking at it for weeks on some app, but you don't actually have money in it yet. So invest however much or as little as you want into the growth stock you're looking at. If it goes down and you still believe in the growth story, because there are some times where the stock will just go down 5 or 6% for no reason, just because it's had been on such a good tear. Use those opportunities to buy the stock at a lower price. That's why it's always good to have some cash on you so that you are able to take advantage of those drops. So if you buy a growth stock now and it goes down by 20%, you can buy the same number of shares at a discount, and then instead of a 20% drop, it's just a 10% drop, because you're including the shares you bought earlier and you're including the shares that you bought now. So it cuts from 20% to a 10% loss. And then on that upside, you have more shares that are going to have that benefit. So those are just some of the strategies when it comes to growth stocks. And a lot of it is based on making sure you have accelerating revenue, that good growth story, and a market cap that indicates there's a lot of growth. $1 trillion market cap, a lot harder to double, triple, quadruple than something you buy at a $5 billion market cap. So I'd love to hear you guys in the comments what growth stocks you guys recommend. I'll come out with a video soon sharing some of mine, and I'll see you guys in the next one.